All right, guys, week 6. Crazy, 6 weeks has already gone by. Um, cool. So, like I said, we're going to talk. I'm going to back test. We're kind of just going to pick around on the chart. I'll get rid of all my drawings. We'll talk about certain situations that happened uh, within certain ranges and areas, all that fun stuff. We're down to 15. We'll just talk about the week that just kind of happened and go through some price, go through some seconds entries. Like I said, higher time frame sweeps, understanding when it's even appropriate to jump on the seconds or if it's even required to jump on the seconds charts, right? So yeah, that's basically it. So there is a good opportunity in here. We're going to talk about this is, I believe, on Monday, if I'm not mistaken. So look at that, and then we're going to look at, this was kind of a dicey one because we had a 15-minute chalk. Anyway, we'll get into all that. So before we get started, again, just kind of like a recap or a reminder, January 10th is when we're going to be doing the live trading week. What else did I have to say today? Some of the, give me a second, I'm just going to put my video off. I don't want to see my face on the screen. So one of the things that needs to be talked about is taking losses. One of the things that I think everybody struggles with at one point or another throughout trading career, session based, whatever it is taking L's, and I'm no different. It doesn't get any easier, but how you deal with them makes it easier. So one of the first things that should be done, actually, does anybody have a guess as to, so if you took an L, you're on the one, like let's say you're in here, right? And you ultimately saw sort of like, demand in here, created this, we broke structure, created demand in here. And let's say you, in this area right here, you took a -1 because we got swept out. What would be the first thing, if you were on the 1-minute chart, that you think you should do if you took a -1 on the first chalk? Any ideas? Zoom out. There we go. There we go. Zen. I'm fucking right. Good man. It's really simple. Anytime you take a loss, the first thing you should be doing, the first thing instinctively or instinctually, whatever word it is, that you're going to want to do is revenge trade, right? Find something on the 1-minute chart, enter, try to win that money back. And the second that thought goes through your head, I want this conversation or this, recording to kind of pop into your head and say, okay, if I took a loss on the 1 minute, chances are I missed something on a higher time frame. And that's all you really need to remember. If you think that there's going to be a trade within the next 30 seconds, 5 minutes, whatever the hell it is, let me tell you, if you think that that's what's going to happen, it's possible, but it's also a lot easier to understand what's going on when you just zoom out and understand, okay, are we just sweeping the area to come down a little bit lower to then go in the general direction that we're intending to go? So we're going to talk about that in some more detail. But anyways, the bottom line and the thing that I'm trying to get across here is, if you take a loss, chances are you're on the 1 minute because you're on your execution time frame. There's been a certain amount of things that have lined up within your trading plan, and it just didn't work out. So there's always a reason. And the big thing to recognize is that if you just zoom out, a lot of the time you'll be able to see what's kind of happening from that higher time frame perspective. Okay. What else do I get? So how to back test. I think everybody's got a pretty good handle on how to back test. Usually it's kind of difficult, really. Like I said, the way that I really enjoy back testing is I don't back test unless I make a mistake. So this is all kind of recap really for this whole weekend. I mean, we're going to be talking about a lot of the same shit we've been talking about this whole time. And, there's just not a whole lot more to talk about. We'll look at the seconds and stuff like that. But I mean, backtesting is one of the most important components of any strategy, really, right? The only way that you can really learn it. But I think the best way to go about learning a strategy, I used to use if you want to learn how to ride a bike, you got to get on a bike, right? You can't just sit there and watch somebody else do it. You got to get on there, scrape your knees up a bit, and just kind of go through with it. You know, swimming, same shit. You got to almost drown at least once, right? Parents throw you in the pool, whatever it is. But really, I mean, all jokes aside, you know, what it boils down to is I think the best way to go about learning any strategy, and this one's no different, is to trade on demo. You know, make some mistakes, big deal, it's fucking pretend money. But ultimately, you know, get out there and see what it feels like to take the losses, right? You know, the losses hurt just as bad on demo. It still pinches, right? It's still like very much an emotional roller coaster when you're dealing with L's. So when you take losses, you need to figure out why. And the best way to, and again, ties in with my first point, is you know, go back and like let's say you took a loss right here, you know, demand failed, and then a lot of people looking for shorts here, right? Which is cool. You know, this fits our trading plan really. I mean, we broke structure to the upside and then immediately like this looks like a chalk, right? But anyways, there's all kinds of stuff over to the left that we're going to deal with a little bit later. But the bottom line is, if you make a mistake, go and deal with it right away, right? The best way to deal with it is zoom out, okay? In the moment, zoom out, see what's going on, see what needs to happen next. So obviously you'd have this mapped out. If it doesn't deliver criteria and show you that chalk to the downside, well then quite literally, once we start breaking through, we're going to say, okay, well, now we have a strong low, right? So all these things combined is what is essentially going to give you that overall narrative, right? Bring everything together. So if you make a mistake, again, back test it that day. Don't beat yourself up. Have some sort of a parameter or a limitation rather to how many losses you want to take. You know, I might bump mine up to 3 losses now, and I'm only going to risk a maximum of a 0.5% per trade, plus commissions, obviously, and spread. So it'll end up being, you know, 0.7 or whatever it is after commissions and stuff like that. And then the first trade of any given day, you know, risk 0.25%. If it runs fucking ADR, who cares? Doesn't matter. I mean, you know, just again, all I'm trying to do here is get you guys in a position to get some rules for yourself. My rules don't need to be your rules. You just need to, you know, figure out who you are as a trader, where you struggle, and have parameters in place to be able to minimize these mistakes that you make, right? Because we all have bad habits. For myself, it's revenge trading. I used to be really, really bad for that. And the best way to do it is to literally just limit your losses, right? And like, I know it's tough, but if you have a little bit of discipline, you can just say, you know what, fuck this. After any two trades that I lose throughout the session, it means I fucked up. I screwed up my analysis. I got to come back tomorrow. And what that does over time is just going to allow you to really be selective of where your trades should be entered based on the fact that you only want to put your trades on areas that are going to produce decent enough reactions to get you over to break even. And don't be scared to take break even trades, even if it runs 100R afterwards. It's that motion and it's the follow through of being able to have the discipline to move to break even so that you don't jeopardize your amount of trades that you've allowed yourselves to lose per day. Okay, any questions about that? Yes and no. Any questions? It's all pretty repetitive stuff at this point. You know, I just try to make sure that everybody's on the same page. And it's ultimately what we're trying to do here, right? Make sure that we're all doing the same shit. So, okay, let's talk about, you know, higher time frame sweeps. So the first one we'll talk about is going to be this guy right here. Yeah, right here. Okay, so 4-hour chart. Pretty simple. You know, this made this, right? We broke that here. So ultimately, you know, the low that should be strong would have been here because this is the low that created, but this is kind of like the decisional area. So what this ends up doing, you know, obviously there's a news day here, so this isn't super relevant, but one of the things that needed to be noticed is that this low right here failed to take out this high, which usually means that this low is going to be weak, but because this low is the origin of the move that broke this, chances are somewhere down in here, we're going to have a strong low once we take liquidity under here. So what a higher time frame sweep is okay, well, ultimately we have a higher time frame POY that rests right here that was unmitigated, correct? So you can see that we've just to say tapped into it. So let's just go down to right here. Let me grab this guy right here like this. Oops. This right here. And go down to the 15. And we're going to actually back that up a little bit more, probably just here. Okay, so let's go like this and go to the 1 minute. So once we sweep, okay, hold on here, let's go to 15. I always like to leave a little marker for where my low point was. Okay, so the low point is right here, right? So this is what we're expecting to sweep below. Now, in all fairness, we don't necessarily need to mitigate this demand, okay? A sweep is just literally a purge of whatever liquidity is left below the low. So this is a sweep, okay? And all this means is basically the first 1 minute change of character that happens is typically where we're going to be sort of looking for trades afterwards, right? On the seconds chart, let's go down like this. You can see that we have not had any sort of change of character yet, right? Up until this point right here. Okay, so once we have this change of character, then we got to start figuring out, okay, well, where's the strong areas within here, right? So obviously, you know, the first place you're going to look is at the extreme. So when we start kind of playing back into these levels, let's go out to the 1 minute. What I would do here is kind of wait until we start pulling back to about 50% of this guy. And we're going to start looking on the seconds charts to see what's going to end up happening here. Okay, so we start moving away. We can now move this up. So once we start breaking structure to the downside on the 15-second, that's when we can measure out our leg. Okay, so we're starting to break down now. Okay, so this is kind of our leg. So somewhere within here is where we're going to be looking. Okay, great liquidity. Okay, go above a little bit. So you can see what's happening, right? Is we're starting to, you know, create this liquid region here that we essentially, in order for us to continue going higher, we're going to need to, you know, take out sell side liquidity that rests underneath these levels, right? Like we don't have a whole lot of liquidity built within this area. This is just imbalance. So really, you know, it's really quite corrective. So in order for us to see some sort of a rapid move to the upside, we first need to see some sort of a sweep. You know, we saw a sweep here, sweep, break structure right after. We got equal highs building like this. So once we start seeing this, it's a little bit easier to start looking for, okay, once we take out the low side, which eventually I'm sure we will do. Okay, there we go. So you can see that we kind of fell through here, and now we're expecting it to do it again. We failed to take out the high. So this is how I like to use seconds chart, is wait for all of this to kind of sweep out. Yeah, there's still no entry for me just yet. You can see all the built up mitigations, right? So this is just like slowly taking highs, slowly taking highs. We can't move aggressively because there's no liquidity built right here, right? This is just a really big piece of imbalance. So like I said, just wait to see the first sweep, right? And ideally what you want to see is take out all this sell side liquidity. Once we take out sell side liquidity and we see that first chalk, that's usually the first indication to be able to get into the market to go to the upside. Typically we'll build up like a mitigation across like this, have some sort of, you know, not trend line, but built up mitigation on a little bit of a higher time frame. But the bottom line is we want to see all of this get taken because of the built up mitigations, because what that allows us to do is say, okay, if we've taken and satisfied all the sell side, all that's going to be left really is going to be buy side liquidity, right? Given the fact that, of course, if you remember, we've already taken underneath this low. So all of the stop losses have already been taken underneath this level. Hopefully that's easy to understand. So with something like this, you can probably go out to the 1 minute. And what I would probably do is say, okay, well, once, you know, sort of these levels right here are broken, let's see, yeah, probably something like this. Once these levels are broken right here, this is when I would start looking for, because you can see this is partially mitigated, partially mitigated. So somewhere in here, I'm going to be looking for flip or chalk or whatever. So there you go, you start to break down. Okay, so at this level right here, this is when I'm going to start at least having a look. Personally, I like the idea of this wick. But I also like this inside bar basically across like this. So I would probably just take this entire region right here as an area of interest, and then I would be jumping down onto my lower time frame once we kind of tap into it. Okay. Come up. Okay, so this is perfect. You can see that we're coming up to, like, remember, we've had to break a structure here. We've come up, and now we're going to mitigate this. Chances are we're going to produce a new low, which would sweep these equal lows into our area of interest, and that's where we can kind of look for our seconds flip. Do you need to readjust? Yes, sorry, you're 100% right. Just like this, my bad. So that's your initial leg, right? So once we break structure initially on the 1 minute, you know, this becomes your leg that you're looking for. Thanks for catching that, Zen. I just missed it, man. But yeah, now you can see these equal lows across here. Chances are, like, I mean, really, you know, something like this, you could probably put your limit order sitting on this POI or whatever you want to call it, this demand zone. But in order to be a little bit safer, which is kind of what the seconds does, is you know, wait for us to come down into this level and then jump down to a 15 or a 5 second and just look for little details. Let's just go like this and put this no gaps. I can't remember how this plays out, but let's just look and see here. Ideally, I'd like to see this swept. Huh. Well then, don't I just look like a jackass? Okay. So here we go. So this is probably the area that I would be most interested in, would be somewhere. Let's go to the 15 second and just have a quick look here. Equal lows still. Yeah, I don't know if I would be putting an order. The only place I'd be interested in really putting an order or watching for would be somewhere kind of like in this region right here where that little bit of imbalance is. You know, supply was sitting here. This is the level that kind of broke through supply. So let's see how this ends up working out. Again, I don't really know. I don't have any notes or anything like that on this. I just want to talk about these higher time frame moves. Okay, so this just ends up running away, but we have equal lows. And this might just take off on us. So that might not have delivered. There we go, equal highs. Equal highs. So this should break down below this low. Building liquidity, but now we have liquidity built like this. All right, so this is a shit example. There we go. So now we're going to break down. So this is a great area to look for a second slip, in my opinion. The reason why is you can see that we've taken liquidity right here. Okay, does not mean that we need to come down and fill this imbalance. If you saw a 5 second flip right underneath these liquid regions, doesn't necessarily mean we need to come down to here. I would probably be looking to get into a setup in and around this level after this liquidity is taken. Very similar to this, once liquidity is taken, if you saw a 5 second flip, which in all fairness, you didn't really see it on this one, but yeah, basically you can see that, okay, we've had this higher time frame sweep over here. We've came up, we've swept below this. This is our area that we were looking for it. And then furthermore, you can see now that we have this sort of liquidity kind of built up here. We've kind of swept below it. So something on a seconds chart in and around this region would be an ideal setup for us. So let's just see here. Obviously, we need this to break right here to kind of jump into this. Okay, so we've broken above. This should give us a strong low. So as this kind of comes back down into here, this would be an ideal area to kind of take a position, provided we come down to it. Building liquidity again. I don't know that this is going to end up actually working out, but again, just trying to show the process behind how I would use it. Again, still built up mitigations here. You know, this is kind of waiting for this to sort of sweep down into this more extreme of the area that's already taken liquidity. Doesn't mean it's going to work out every time. It just means that this is the only way that I'm really comfortable with getting in, is once we have that take, right? So let's go like this. I'm just going to kind of map this guy out like this. And you don't need to put a limit on in this area. What you need to do is just say, okay, well, this entire area is where kind of demand sits in the market. So once we come down, then you would jump onto the seconds chart and then look for that exact same thing. Okay, let me just get rid of these. Hopefully that makes sense. Again, it doesn't mean it's going to deliver every time. It just means that this is the only way that I'd be comfortable using this kind of chart. Okay, so now we're in it. So ultimately, you know, yeah, so right here, this would have been your entry right here. Okay, so you can see that we have, you know, built up mitigations across here on the 5-second chart. So as soon as we break above that, and then we start to see this little pull down right here with this candle, this is the ideal setup for me. Once we kind of tie into the, or tapped into this demand, you can see that on a very low time frame, we've had this small bit of a sweep right here, followed by a break of structure. You're not going to get perfect mitigations. You're not going to get perfect entries on the market, but the idea is still here nonetheless. So basically just like this. So as this is kind of building down, you know, you would want to keep yourself, I don't know, it would depend on what you would want to do. You know, if you want to give yourself like a 1.4, 1.2 pip stop, and then as soon as you get within that range, you know, execute your position. And then very, very quickly after, how I like to use the seconds chart is like, once we start to see that we have built up mitigations to go in the direction that we'd like it to go, I'd be moving over to break even up until we took out the high. Once we take out the high, this becomes an area that we could potentially navigate back down to. So that I would reopen my stop loss at this point once I've partialed out at this high. Does anybody have any questions about this sort of, I guess, style with the 5-second? So basically 5-second is basically the only time I really use it is in a 1-minute POI, that's swept liquidity. This is where I'm going to be looking for this sort of entry right here. Any questions about that or comments? If so, just, you know, either raise your hand or just put a quick note in the chat. There also needs to be, and I'm sure everybody knows this by this point, there needs to be a reason for price to go up, right? So for myself, it needs to have, you know, this little bit of built up mitigations to at least get us up, and like we're going to see some slowdown, obviously at this little area, probably pull back, same thing up here, pull back, and then we have relatively equal highs over to the left as well. So it needs to have reason to want to go in that intended direction. Just see how this ends up playing out. Yeah, so there you go. You get the
sorry, Tyson.
Yeah.
So what are you looking for to move your stop to break even then? Sorry.
So basically this first bullish candle right here on this 5-second chart, as soon as I see this start printing, I'm more than confident to just kind of move this over to break even. And the only reason why is because as soon as you see this momentum kick in, we don't really have any reason to come back down here, right? Because if we have higher time frame or 1 minute, you know, relatively equal highs pulling price to go in this direction, we don't want to be exposed, right? So I'd rather get taken out at break even and then see this swept one more time with the next change of character then, you know what I mean, take an unnecessary loss.
Right. So yeah, it's impulsive there, but if price was kind of correcting upwards, would you still, at what point would you move up to break even then?
Well, basically, sorry, I guess the better way to go about this would be as soon as this high is kind of broken. You know what I mean? Like this is ultimately the high that needs to break. So once this breaks down, I would want to be over at break even almost right away, because the chances are that we could come back down and sweep this out, right? So essentially, you want to get over to break even as quickly as possible as soon as you see a little bit of momentum kick in. So like you said, even if we start moving correctively away, that's going to create liquidity. So I guess, you know, really the bottom line is get yourself over to break even almost as soon as you can when you see that first little bit of structure go on whatever time frame that you're executing on.
Right, that's perfect. Thank you.
Okay, man. Do you do this style of break even only for seconds trades? So I always like almost all of my entries. The way that I've been managing more recently is anytime I get into something that I'm almost certain will produce some sort of a reaction, essentially I move into break even as soon as I can. First a little bit of structure that gets taken out. If we have higher time or not higher time frame, but like if we have any kind of liquidity built up mitigations kind of coming into this, ideally it's going to push away pretty quickly. I move over to break even right away up until I hit 1 to 4. As soon as I hit that 1 to 4, I usually take that 25% off. And then at that point, I can reintroduce my stop loss. But I want to be over at break even. And the reason I do this is because if we decide to sweep one more time and then do something like this, at least this way I'm over at break even. It takes me out at break even. It doesn't jeopardize how many losses I take for the session. And a lot of times we come back down to mitigate this and then just end up ripping and I get taken out at break even. But I mean, for myself, again, because I have such a tight risk management parameter, this is the only way that I can do it, that I can essentially make sure that I can stay within the session, right? So it kind of puts a lot of pressure on yourself, but it's good pressure nonetheless, right? So I guess to make a long story short, I always want to make sure that, I'm minimizing my risk so that I can be able to take another few trades throughout the session. Because all this really means is that if we end up making a new high, like let's say we jump down into here, make a new high, ultimately all this means is that at some point we're going to be coming back down, whether we take liquidity, whatever we end up doing, it's going to give me another opportunity to get into the same trade. So for me, it doesn't really matter too much. And every time that we come back to tap into this, you got to remember that that creates more liquidity, that creates an opportunity to sweep a little bit lower into this POI before then going to the upside with a lot more impulsive behavior. So again, this is going to be something that not so much even back testing. This is something that's going to be more live market kind of scenario. You're going to have to really just figure out what works for yourself. And for me, I'm totally okay with taking 15 break evens in a fucking session if that's what it takes. But the long story short, I mean, like you got to be okay with taking these break even trades, knowing that there's going to be a setup right around the corner. So I'm just going to take this off, and what I'm going to do is just kind of go over to. I want to keep everything up so that we can kind of talk about what it looks like. So obviously, you guys know that we're in higher time frame demand. This is that 4-hour demand level. The other thing, right in here, again, we're not doing a back testing session. I just want to talk about higher time frame sweeps. Is okay. We came down right, so you can see this is the area that we kind of were just trading from. So we ended up taking, it was right in here that we ended up taking the trade, and you can see very shortly after we come down into this level and then take out all these equal lows, right? So, oops. So when this happens, and you traded from this area right here, you took this, it ended up breaking the high, you move yourself over to break even, you take, let's say you're 1 to 4 off at this level, and then all of a sudden we start crashing down. You have to realize that, okay, well, all we've done is mitigate this to be able to push up a little bit higher too, right? So the job, like a lot of people looking for supply trades in here too, which is totally okay because we have unmitigated supply resting in here. We had a sweep, but to make a long story short, supply should be, it's a very simple thing. When we tap into this supply zone right here, and then we break this structure, ideally, we should just keep breaking structure to the downside up until we take out this low, right? Otherwise, this is not a strong high to be able to trade from. And so if you ended up looking for supply trades after we've basically taken out these equal highs, you have to remember that now all we're doing is providing liquidity for this move higher, right? Because we have built up mitigations, we have equal highs, equal highs, equal highs. So, seconds chart, like I said, for sweeps and stuff like that, right in and around here, you probably could have seen your first potential entry when, we broke here. You could have maybe caught this down like this. Depending on how big your stop loss was. Usually when we see higher time frame sweeps, I'm going to show you a better example from 2 days ago right now, actually. But essentially what ends up happening is I will usually just go onto the 15-second for higher time frame sweeps. And then after, or anything for 5-second is going to be based off of a 1-minute POI. So let's just show you this little piece right here. Okay, so when we came down, yeah, right here. Okay, so you can see that we're essentially coming down. So ideally what's going to happen here is if you have supply resting right here, okay? So supply's in the market, you know, we've broken structure, we've come back down, we've mitigated, perfect, everything's good. Here, let me draw that out a little bit clearer so that we can actually talk about it. But ultimately you've got, you know, supply in the market right around this wick, right? So this is textbook setup for you know, a sweep right in this level. Okay, so we've tapped in right here, pulled back, and then induced the level, which is ideal for us, and then followed by a break of structure on the 15, which creates that strong area to be able to trade from. This is obviously in London, but at least it's a good example. So you go something like this. We've taken out structure. Ideally, you want to see it come back up into these regions. Now, ideally, you know, this is the high that creates the low, right? So if that's the case, you know, we should not be breaking structure whatsoever, okay, up until we've taken this low, right? Because like I said, you know, this should be process of mitigation all the way down until we break the low. That's just the way that the market operates, right? Otherwise, if we start breaking structure, it means that there's more liquidity above here. So soon as we, like you can see, there's all kinds of unmitigated stuff in here. So the first area that we're going to likely see a reaction from is going to be in here. Now, would you be trading long? That depends. Personally, I would have to get my premium and discount tool. Let me just go like this, demand. Yeah, so your leg, like personally, I'm not looking to trade long just yet because we haven't really taken out supply at this point. So let's just go like this and take this is the last little bit right here. Yeah, nothing for me right this second. So if you start to see this right here, okay, and all of a sudden we break through barely, and then you start seeing, oops, let's go back one candle. You start seeing this right around here with this kind of volume kind of coming in after we've swept this low right here. Ideally, what you need to start thinking about is, okay, well, if we're starting to move with some force here, what have we just created, right? We've now created some equal highs. There's no business coming back up to the extreme, especially after we've already mitigated it. So what this is usually going to do is, anybody have any ideas what might happen next? So we've got equal highs. Yeah, exactly. So now you got to remember, these are relatively equal lows down in this region right here too. I mean, we just to say taken a small bit, but ultimately, you know, we can call that pretty well equal lows at this point, right? So if that's the case and we have relatively equal lows sitting across like this, you know, first thing I'm looking at when we start moving up like this is we're going to sweep. And then we have to figure out exactly where the sweep should stop. So the next unmitigated area for me, anybody? Yep. Cool. So when you start to see this, you know, anytime we get in here and we see a 15-second sort of entry model, this is where I'm looking to potentially get in. Supply. I can't remember if this was a 5-second or a 15-second on this one, but we'll play it through. Let's go down to the 1 minute, and we'll just let this thing kind of rip up to that level. Okay. Okay. So right here, you can see that we've essentially, you know, taken out, where's the equal high? So again, what I like to do is go like this and just understand where that high point was. And once that gets taken, it's really simple. We want to see equal highs build on the lower time frame, which is exactly what we did. And then I'd like to see it induce, which is exactly what it's looking like it's doing. Is that similar trade to the one that happened today? Very similar. We're going to get over to that one in a few minutes too, Cassia. So if you look, equal highs built, swept, and I believe I was on the 5-second. Okay. So right here. But you notice anything? cool. Everybody understand that? So if that's the case, you know, ultimately what you can do is throw your limit order on. Now, what I like to do, as most of you guys know, I like to keep about a 2.5 pip on these chalks. Whether or not that's something you want to do, entirely up to you, but ultimately something like this. So what I'm going to do is just go to the 15-second, and you can kind of see something like this right here. Okay. So you see where this little order block is that took liquidity, and then I'll just spread this out to about 2.5 pip. You could do 2 pip as well, but I'm just going to show you that ultimately, yeah, demand is broken. You can't see it as well on the 15-second, but you can see it on the 5. And the reason you're able to jump on these low time frames, you know, once we've broken structure like this, is because if we've taken out equal highs right here, and we've now induced the areas right here, and then followed by a change of character. The idea behind it is that there's not going to be anything left to grab for liquidity other than stuff that sits now at these equal lows down here, right? So if you have equal lows sitting across, let me just go over here like this, the next, let me go out a time frame just so that we can see a little bit better. The next realistic area that we should be grabbing liquidity from to be able to fuel a move higher would be underneath these lows, right? Because every single person in the industry, myself included, is probably looking for longs around this area. Of course, if it provides some sort of criteria, right? Because on the 1 minute, let's go like this, you can start to see that, okay, well, ultimately we've, you know, kind of swept down into this area, which is good. But ultimately we've created these equal lows now. So if everybody's looking to trade at equal lows, what's going to end up happening here is we're going to end up coming down, producing a reaction, sweeping, and then once we sweep down here, we can then look for the exact same thing. And the reason we can look for the exact same thing is because if you go out to the 15-minute, you can kind of see what ends up happening here. If we mitigate this area right here, let me just get rid of all my drawings. Sorry, guys. Go like this, go like this, go like this. Okay, so if we end up coming down, which is exactly what I thought was going to happen, I got out almost to the pip. I was a little bit lucky, but the trade idea was basically that this low was going to be weak based off the fact that there was equal lows underneath. So once we come down and plunge through this, ultimately what's going to end up happening is now we have equal highs across here. So if we have equal highs across here and then we take out equal lows first, where's the next place we should go? Yeah. Everybody understand that? It's not about structure. It's about where orders are sitting. It's about understanding where liquidity is resting in the market. So across equal highs, because let me just, you know, spoiler alert, I think we all know how this goes, but let's just talk about the entry here, and then we'll get into that a little bit later on. So ultimately, we've had a chalk here on our 5-second time frame. Right, so we want to cover that high in case we decide to sweep it one more time, which is actually what ends up happening. So we come back up. Okay, we induce one last time. Okay, now there's a couple different ways you could have got into this as well. You could have waited till this low right here gave out something down a little bit lower, which obviously it didn't, but now it created that liquidity. There was no real entry up in here. So if you wanted to wait for even this now to kind of give out, well, let's talk about entries that could have been available for you here. Okay, so hold on here. Let me just see if this ends up. You can see that this low still has not been taken, but we've created liquidity. We've kind of swept below this low, which in theory means that this high should be strong given the fact that we've taken higher time frame liquidity. So your first entry, you could have really put something like this with the stop loss above here after we've basically taken out this low. And this would basically show you that this right here failed to take out this high and then allowed this low to break, which creates more liquidity to be able to fuel this move. So that's another entry style that you could have looked at. Personally, not the one that I would take, but I'm just trying to show you all the available options to see which ones resonate with you guys. And ultimately, we watch for this too. So once we start giving way here, it's simple. You know, what's the first, what's available for us, right? Because we've already taken higher time frame liquidity with all of this move right here. Ultimately, process of mitigation anywhere in here, I would basically have my stop loss kind of set up like this. To be able to say, okay, well, I just want my stop loss resting above these highs. I'm not worried about equal highs here. And the reason I'm not worried about equal highs is because we have no business coming up here with all of the liquidity that's being dragging us downwards, right? We're not going to be coming back up to this extreme because, like I said, we've already taken higher time frame liquidity. The market wants to start moving down to collect the rest of the orders. So at this point, you know, you can see that right here. I would give myself maybe half a pip above this. And then basically as soon as we get within 2 pips or 1.8, 2, 2.5, whatever you want to do, ultimately hit that button. And then let's just zoom out and start talking about some targets here so that we can make sure that we're all on the same page. So personally, like I said, I'm looking to take out equal lows, right? So you can target something like this, this guy right here. Let me just kind of zoom out a little bit. And this guy right here, you know, target equal lows. So 1 to 10 and 1 to 13 are with these two. Let's go down to 15 second here. Okay, so 1 to 12 and a 1 to 10. I mean, these are good risk reward trades, just knowing where liquidity is resting in the market and where it's going to take it next, right? So with that said, let's see if there's any other entries that kind of fit our criteria. Would you partial on the way down? I did not partial on this position. And the reason why I didn't is because I knew, nobody knows anything, but I had a really, really good feeling that because we cleared out so much liquidity to the top side, the only area that we could really satisfy next would have been underneath the equal lows. So that's personally why I didn't partial out of it. I took full volume off right underneath here, but I did move over to break even and let the trade kind of rest at break even. So my management styles, they vary from depending on how things kind of build up. But because of the way that this built with the equal lows, for me, it was inevitable that we were coming down to take out that liquidity before going any higher. So, you know, could have partialed at 1 to 4, kept the stop loss open, and then ran the rest full volume to underneath these lows. There's absolutely no problem with it. I don't know if it was greedy. It was just, I had a very confident edge given the fact that we came up to mitigate a higher time frame POI. We took liquidity from these POIs right here, came up, and the next reasonable area for the market to travel to collect the most orders it possibly can, we're going to be right underneath these lows. Does that make sense, Seb? Cool. Okay, so obviously we've broken. Let's go to the 15 second, have a look at what's going on here. Okay. So there's that little chalk to come back up. So when this ends up happening, it's really simple. Now you got to say, okay, well, where does you know, supply kind of control the market? You can play around with your time frames a little bit, you know, check out the 15, check out the 5. But really, I mean, you can kind of see it a little bit better here. If you're not in a position at this point, you could be looking to do something very similar to this right here. Let's go to the 15 second, and you can say, okay, well, ultimately, actually, let's see what the 1 minute offers. Yeah, maybe the wick right here. Everybody see that? You know, this is the move right before the volume kind of kicks into the market. So this wick is ultimately where the market should kind of slow down. And then you could look for a lower time frame kind of flip. Okay, so we tap in. Let's go down to 15 second. Sorry, 5 second. It's 1 minute POI. So right here, this is your entry right here. You can kind of see that we've had this equal highs induced break of structure on our way back up is when we want to catch this thing with a market order, leaving your stop loss just above there. So let's just go like this. And, you know, ultimately we want to keep our stop loss just above this high somewhere. And then whenever you get within whatever parameters that you want, right? If you want to do a 1.5, you want to do a 2, whatever it is, as long as we tap into that level, you're going to execute on market, knowing that we've taken that small bit of liquidity, broken structure based off of this POI that's resting right here. and the expectation is to still take out those lows. Yeah, that's kind of how I would frame this up. So now you can do the same thing, kind of come down.
Sorry,
into
Tyson.
here. Yeah.
How much buffer do you usually like to kind of leave above like the high?
Okay,
Do you
so
like to count the spread?
I always count the spread on top of whatever this is, right?
Sort of like 0.3, 0.4-ish for FTMO?
Yeah, about 0.2, 0.3.
Okay, right. Cheers.
Yeah. So actually it's a good question. So when it's continuation, okay, anything after the initial chalk is going to be a continuation trade. I'm usually just covering spread. I'm not doing like a 2.5 pip stop on the initial change of character right here. I usually like to leave about a 2.5 pip stop plus spreads. So and the reason why is because of this motherfucker right here. And this happens more often than not. You'll get swept out on the first one. And then all of a sudden you kind of doubt your analysis, but ultimately everything is there. The pieces of the pie are all together. You could have been patient and waited for this entire thing to kind of just show you that confirmation entry. But a lot of times it's nice to get in towards the top because sometimes we come back up to very close to this to mitigate before dropping down, and at least you're in a position already. And if this doesn't decide to come back up to here, you're nice and protected. You've already taken your 1 to 4 off the table in and around these regions, and then you get to watch the rest of it kind of happen. So recap, 2.5 usually on the initial chalk on higher time frame sweeps. And then basically just adding spread above the top of these areas right here on any kind of a continuation.
Great, thank you.
Cool, man. So here we go. Let's see what ends up happening here. Okay, and we start moving away. So something like this, you know, we've got these little, we've got reason for price to come down, a little bit of built up mitigations and stuff like that. I would probably be pretty aggressive. Given the fact that it's just higher time frame sweep, we don't know if we're going to go higher or what. We have a hunch that we should be going lower. It's really simple. Like, I mean, just protect your capital. You know, if we come back up there, who fucking cares? You know, there it is. Come back down. This is not demand. Why? Because we didn't take out the top up here, right? If we would have taken out the top, this would have been a potential strong area to trade from, right? Or look for criteria there. So, oops. Okay, building liquidity. Might be a little nerve-wracking at this point. So at this point, you should be at break even. And then as soon as we get near this low, we got equal lows resting there. Let's go to a little bit of a higher time frame on the seconds chart. But what all the second chart does is give you that little bit of extra confluence, right? The first trade is already at break even or not yet. Yes, it should be at break even up until I can take partials, right? Personally, like I said, the way that I manage this was just basically break even and leave it there. But if you want to go the partial route, which is like, okay, as soon as we hit like a 1 to 4, so I don't know where exactly that would be, probably 1, 2, 3, probably somewhere down in here. Once you hit that 1 to 4, then if you really, really want to marry this trade idea, what you can do is reopen your stop loss, because if we decide to come back up and sweep up here, that gives you an opportunity to kind of stay into the trade rather than go over to break even, depending on how valuable this trade idea is for you. So at this point right now, I would definitely be at break even up until I can at least partial out of the position, if that makes sense. Cool. There's no right or wrong way. I think the best way to go about any position, especially with higher time frame sweeps, really any position at all, is get over to break even as soon as you can, because even if you get taken out at break even, you have to remember that if your trade idea is still valid and you got wicked out for whatever reason, you're just going to look for a better entry price to give yourself some better criteria to get into that same position. And again, this is how I see it. A lot of times it's a tough pill to swallow, given the fact that, you know, this might be the setup that runs 100R and then doesn't offer any kind of, you know, scale-ins or anything like that. And that's just the way things go sometimes. You're not going to catch every move. And sometimes you're going to get taken out right before a 100R move. And that's just the way things go. So, yeah, so let's just keep playing price here. You know, ultimately you should be at break even at this point. Okay, we start to break down. Okay, cool. So let's go back out to the 1. We'll just kind of manage. And I mean, if you want to go the management route as well, you know, you could probably move your stuff down to these areas right here, because in theory what should happen is we should go through process of mitigation up until we take out the low, right? And then we'll likely see some sort of a change of character to come back to the extreme. I'll go down to the 1, because we usually don't want to visit the extreme that's taken liquidity up until we've at least taken the low, right? That's usually how structure starts controlling the market. Oops, let's just go like this. And go like this. So for example, like if we come through like this, the only guaranteed area that should be strong or that we should look for criteria around would be in and around this. I think we are getting a similar scenario happening right now on EU. Okay, cool. We'll have a quick look at it in just a second. Haven't looked at the charts a whole lot the past couple of days. Been taking some time off. I'm not going to be trading probably until first week of January. Oops. Okay, so we get the break. Oops. Okay. Okay, so let's talk about this. So we've essentially broken through, and then we see this change of character kind of sitting here like this, right? We've basically broken above. We've come back down. A lot of people would probably jump into this, and there's nothing wrong with that. That would fit your trading plan. Basically, as soon as we take out structure, the idea is that we should be pulling back up into this more extreme area, right? So once you see this, and here's where I was talking about, okay, once you get tapped into the trade, if you see that we're having a hard time in and around this area right here, you got 1, 2, 3, 4, 5 minutes to figure out to go to break even. Okay, that's a lot of time. It's a lot of time to say, you know what, I don't want to be exposed to an unnecessary loss. We've printed equal lows, almost identical equal lows. What do you think we should be doing if we wanted to get into a long right now? Like let's say we got into this long right here. Okay, we saw that we're having a hard time at this level right here. We have equal lows printing. Ideally, what I would look for is something like this, right? Some sort of a sweep that would essentially get us in a position that we've now satisfied all of the sell side liquidity that's underneath here. And if there's nothing left for the sellers, guess what? Now we have built up mitigations. We have a reason for price to want to travel in the direction that's intended, right? So same thing. So once we get on this and we see this sweep of liquidity, guess what? Let's jump down to a 15-second and see what ends up happening, right? So let me just mark all this out so that you guys can watch it back in hindsight as well. So I actually missed this long. I was at the gym, getting back from the gym rather, and I missed it. So equal lows get swept. Ideally, the area that I want to see break is going to be right here, right? Just go like this. So once that breaks, if and when it does, I can look at getting into a trade. So there we go, we've broken. Guess where the order goes? Easy peasy, man. Easy peasy. Do you see? But we also have reason for a price to at least get us up to here. Equal highs, relatively equal highs, built up mitigations. This is a high probability setup, given the fact that we've swept, we've come down, we have this area right here, okay? Look for this, built up mitigations. Let me show you something on the higher time frame right now. Okay. Do you notice anything similar about these two scenarios? It's exactly the same, right? We take, we have this change of character, we come back down, we sweep equal lows, swept equal lows right here. Now we have equal highs, we have built up mitigations. The only place that I'm really interested in taking my position off the table at this point is probably going to be somewhere up here where this first imbalance is. You know, we still have imbalance to kind of fill up in this region. This would be kind of like my TP. We have all these built up mitigations across here. Actually, you know what? If I'm thinking about this, this might be the first place that I'd be looking to take profit off, would be somewhere in here, because these aren't really equal highs. And you can see that small bit of imbalance. So I would say that this is probably a logical area to start, looking for some TPs if you were looking at this, based on the fact that we've built equal highs, we've built liquidity to go in the pro trend direction. We like ultimately this high to be strong, you know, obviously I was looking for shorts in here as well, but it didn't deliver criteria. So if it doesn't deliver criteria, you know, there's no reason to take the sells, right? But we now have the equal highs, we've swept, you know, obviously creates a POI, but anyways, we'll get to that in just a second here. But yeah, the reasonable area to, oops, I ended up getting rid of that. So let's go like this and right here. Take this guy like this. Cool. So let's go to the 1 minute, sorry, the 15-second. And we're going to start targeting a little bit higher. Okay, so go like this. I don't know if this gets tapped in or what, but ultimately you can see this entire area like this. So 3.6 pip, 2.5 is about my max that I like to see on the initial chalk. So I can do something like that. Yeah, cool. And your spreads get added to your buy order instead of your stop loss, obviously, on these. So let's see if we get tapped in. Boom. And we start to move. So as soon as we break this area, it's really simple. Move over to break even. We got no business coming back down here with all the liquidity that rests above. And 1 to 4, which is right around here. So obviously we're expecting this high to be weak with all the equal highs and stuff like that. So I would say right about here is when I would partial out 25%. Okay, so take 25% off right here, reopen your stop loss if you'd like to, and then we can go back out to our higher time frame and say, okay, well, you can see that we've obviously taken liquidity underneath the equal lows. We've swept one last time. The idea behind this is that we should be going higher. Now let's go over to the 15 and just talk about why I can select this area. Obviously you can see the imbalance. We're not quite equal highs. It's just kind of filling in part of this wick. I think we end up going higher. But here's the thing. If you think about this right now, you know, ultimately this high creates this low, right? And then ultimately we come up to this area up in here, and this is the highest point of this structure that puts us into a new low, right? So if you were to take this risk or the this tool right here, you can then see that ultimately the next unmitigated area that rests in the premium is in and around this zone right here. And that's the only reason I would select that. I actually didn't end up taking this long. So again, this is just kind of like a hindsight trade for me. But this is how I would have played that out, given the fact that, you know, we have all these built up mitigations, we have fuel for the move. So here, let's go like this. Now, you want to remember, like, where did we break structure from, right, Hugo? So we broke structure right here. So the low that is relevant to us is going to be right in here. See it? This is the low that takes out this, right? So this is the lowest point before we've broken structure. So we're in that discounted region. I don't know if it ends up doing it for the entire thing. No, but ultimately this is that low. No, well, you wouldn't use the lowest because ultimately, you know, we started respecting supply here too, right? So structure, where's the lowest point that took it out was right here, right? So that's how I would utilize that tool. Yep, go ahead, Zen.
Hi.
Hey.
So I would like to see, can you go back to the 15-second, I think 5 seconds in the entry? Yes. So I know that for this trade you didn't enter. Let's say assume that price hasn't paid past this point, right?
Yep.
And this would actually be the sweep, and then I would actually view the chop here, right?
Yep.
So then my 50% would probably come down to, like, this would be my first entry, and there's a sweep, and then a chop, and I'll enter here.
Yeah.
And then I'll fail, and then I'll look at here again.
So you have to remember, if you want to go on the seconds, what you need to do is select a POI, right, from the 1 minute. So the POI on the 1 minute would be here in this wick, right?
Yeah.
So if you go down to the seconds now, or the 5 second, the only place you could look for a flip would have been in here, right? So you would have got stopped out probably on your first one, right?
Ah, I see. Okay.
So, and
that's
like
better.
a lot of times with these chalks, because you have to remember, and what I'm starting to realize too, the more and more these setups happen, is usually the first change of character is not going to be the one that's going to hold. And the reason why is because every single person that trades order blocks or supply and demand, their stop loss is underneath here on the first chalk, right? So what I usually like to see now is I'll wait for this first chalk to show itself, build liquidity, come up, mitigate, and then come down and sweep that last little bit, and then show a change of character. And then I usually like to enter on this second one. So I'm going to work on getting that into words on the trading plan. But yeah, usually what ends up happening, it's either you get in here and you keep a wider stop loss underneath here, or you wait for that again, and like we sweep those lows one more time on the initial chalk.
Right. So it means that if I have to summarize it, is I would use a 1 minute POI as
Yep.
my reference point.
Yep.
And if I get swept again, I can look for another entry as a new chart. Yeah.
That's right.
Okay.
So it's kind of like, you know what this is? It's almost like a double confirmation chalk is what it is. Because the initial chalk is going to get everybody enticed into here, correct?
Yeah.
So if everybody's enticed into here, the stop losses sit here, and that's what this ends up taking, right? So once you see this, this is going to trap a lot of people on the wrong side of the market looking for this mitigation here, and then you're going to take the entries based off of that second chalk.
Okay.
Test it out. There's going to be times where it's just going to move. You know what I mean? Like there's going to be times where it's just going to move on you. But ultimately, if you're exposed to becoming liquidity, it's just not really worth it. Depending on, of course, how quickly you can get over to break even, how quickly you're able to read what's happening with price and whether or not it's going to work out in your favor. Like here's your chalk right here. You know what I mean? Like you could have taken this right here, boom, take this guy. And then as soon as you start to see resistance and this candle kind of printing and coming down into here, move yourself over to break even. Chances are we're going to sweep, right? And we don't know how big this sweep's going to be. It could have come all the way down to here, but the bottom line is this is the next level that needs to break, and then we start looking in the 50% of this leg, and then looking for an area after we see that second chalk. Cool. Okay. Sorry for the basic question. Sweep and break a structure. Sweep is when there is equal lows, right? How about boss and mitigation? Because sometimes in live market, I got mixed up. Do you have a mic, Joe, or no? I can't remember if you do. Yeah. So basically what you're asking, sorry, basic question, sweep and boss. So basically, whenever you see a sweep, okay, which is usually equal lows, right? Or built up, or like, let's say built up mitigations like this, and we sweep down to the origin and then break structure, that creates a strong area to trade from, right? So a sweep across like this, basically taking the strong low out, because this is supposed to be a strong low because it took out this high. Once we sweep this and then break structure, this is known as that chalk, right? And then a break of structure is just every single time we break above this point, this point, this point, that's just breaks a structure, right?
So the one I'm asking is around here. So this is a sweep because there's equal lows right here.
Yeah. So this is only actually classified. Sorry, the only way that we can classify this as a sweep is if it breaks structure immediately after. So otherwise, like, right, so here, let me show you, actually, this is a good question. So I'll go like this. So at this point right here, all this is a break of structure.
Yes.
Okay. If this does this and then breaks to this side, this is a change of character, which would make this a sweep, because that means that all we did was grab liquidity, grab the orders that sit here, and then immediately there's no orders left underneath here. And we just came up and broke structure to the upside, which is that chalk known as a sweep with a break of structure. Make sense?
So we know after this kind of printed, right?
Sorry, I can barely hear you, man.
Okay, we know that this is a chalk after this candle printed.
That's right. That's right. So right here, okay, we're starting to see a pullback. If we would have respected this and then put in a new low, this would be a break of structure again, right? So ultimately what's going on here is if this takes this level out right here, that's going to be the chalk. So when we come up like this, boom, that's a change of character, right? Because ultimately, otherwise, what should have happened is look at follow, 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 right? So if it breaks above, it means that essentially the buyers are taking back control of the market.
Is this you consider the chalk because it's a weak break?
Let me see. Oof. I mean, yeah, technically, I mean, so if you think about this, like, where is structure here? Like, structure for me in this situation is here to here, here to here. You know what I mean? So you got to look at where the breaks actually happen, right? So the break is here, so this is the high. The break is here, so this is the high. The break is here, so this is the high. The break is here, so this is the high. The break is here, so this is the high. You know, like, you got to be able to see where's the lowest point before the highest point, right? So the chalk is really across like this.
Yeah, I think this is where I think chalk gets confused a little bit because people kind of I think there's two ways you can look at a chalk, as in like a change in trend or sort of just like a kind of, again, like a minor change in trend, because I see there that's the true change in trend, but that kind of lower point is kind of the first indication that we're shifting bullish. So yeah, I think that's what confuses people in how you may look at it, if you see what I mean.
Yeah, can you just map out where we're talking about here?
Yeah, so sorry, let me just put, so basically, like, in terms of how Phantom would look at chalk, we'd
Yeah.
be, oh god, we'd be looking at this level here because each of these candles have traded lower and then that's the high. But I
Right.
see what you're looking at, because you're looking at kind of structure as this one structural leg, and then
Yeah.
this is the highest point we put in the low. So you want to see that go. But we'd
Exactly.
be, yeah, so I'd be looking at that more as kind of like 15-second swing structure as opposed, yeah. I think it's confusing when you like, we both call them chalk, if you see what I mean.
Yeah, I got you. So
Yeah.
for me, like, in order to change character, the highest point before the lowest point is what needs to get taken.
Yeah. All right. Okay.
You know what I
Yeah.
mean? Because otherwise, you know, like, ultimately we could here, let me zoom in here. How many times, like, if this was a 15-minute chart, for example, okay, and let's say we looked at this right here, there's still this wick that's probably unmitigated. There might be a 5-minute POI within this wick, correct?
Yeah.
So we could take out equal highs, sweep into this area, and then still put in a new low, right? Because there's an unmitigated POI within it's kind of like a hidden POI above equal highs. So for me, like I said, like, what I really like to see is this highest point that puts in the lowest point to be able to take out. Once that happens, that means that there's actually been a change in trend, because this is where the break of structure is, and this is the highest point before that structure actually gets taken.
Right. Yeah. Yeah. No, that's brilliant. I just think, yeah, I think it's just two
Two
calling
different
it
ways
a
to look at
chalk.
it.
Yeah. Yeah.
Gotcha.
No, it makes perfect sense. It's just sort of how Phantom have named it. I think it's just caused a little bit of confusion,
Right.
to be honest.
Right.
Yeah. So, but thank you for clearing that up.
Okay, cool. I've been mapping the chalk wrong for the last 6 weeks. And come on, bro. Now, there's going to be times where you know, you kind of have, like, okay, let's say we have structure like this, and then we kind of break down like this. There's going to be times where it's appropriate to do this, provided you have liquidity built up to be able to do it. And this is kind of like that decisional area where the first little bit is going to kind of be enough to take in this trade, provided we've had maybe a higher time frame sweep. Sometimes chalk is just a demand and supply failure, though. It's so, and here's the thing: a change of character. If we think about what that actually means, in order for something to change character, we need it to break a certain level to solidify that this is going to physically change the characteristics of what is happening on the chart. So doesn't mean I'm right, man. This is just my interpretation of what a chalk is. And I mean, everybody's going to have their own way that makes sense for them. For me, what makes sense is if this level right here gets broken, this is the most reliable area. Can I still say, yeah, like, okay, so question, if this breaks right here, okay, this little area, but we don't break above this, okay, so let me just put this little gap within here. I'm sure you can see where I'm going with this, but this is a serious question. So right across like this. So if we break, you know, this wick right here, but we don't break above this wick and we end up in this little red zone, would you put a trade on this demand? Yes or no? And like, just answer honestly. So would you put a trade on this demand level if we ended up in this red zone in between this wick and this wick? So we've broken this one, but we haven't broken this one. So what is classified as a change of character for you then is what you need to define. And for myself, I usually want to see something like this go. It is the more extreme point that puts us into the structure break.
Yeah, I altered my plan actually in the last kind of week, I say, to accommodate this more because I was getting faked out a lot. So essentially, how you're kind of looking at this on the 15-second, I now map this on the 1 minute as well, because essentially I found, yeah, a lot of the time what was happening was we were getting this almost, I changed it in my plan. Sorry, so if you could show back to the 15-second quickly. I've actually changed it into my plan as in I would call this level now like a minor change of character, and this would be my true change of character. Right. So now on like the 1 minute, I'd want to see the true change of character go, and then I'd usually play a 5-second entry off a demand zone in, yeah, something like demand zone in the discount. That's kind of how I've been looking at it now.
Yeah, cool.
Which I got from you, to be fair, which has actually helped. It's saved me so many losses, to be honest. Yeah.
I don't do these things for no reason, man. It's because, like, man, I've taken a lot of losses too, right? I mean, this is really the bottom line. Anyways, anybody who's confused with this, don't make it any, because I can see you're confused. Don't make it any more confusing than it needs to be. Ultimately, what you need to remember is the highest point before we've broken structure is how we would change trend. This doesn't mean anything. Yes, you can. Do you want to show me now, or do you want to, or do you want to do it at the end? Okay, cool. Remind me. We're almost done here, anyways. But anyways, guys, you know, just to make this a lot clearer. Here's the high that put it in the low, right? Here's the high that put in the low. Here's the high that put in the low. You know, this is kind of decisional, I guess you could say at this point, but here's where we really break structure, right? So the highest point is up in here. So you're going to define where your structure points are, right? And never skew your structure favorable to your trade idea. Make sure that it makes sense. You do not need it to favor your bias. You need to make sure that this is a good area to trade from. So don't cut corners and say that, oh, well, once this wick breaks, or once that, like, just let it change character. I mean, look at all the liquidity. If we can't even break through the most extreme point of the 15-second that breaks structure here, man, you're going to be swinging for the fences on stuff and chasing yourself on the 1 minute. So it's not really worth doing it. There's times where it is acceptable, but for something like this, with the higher time frame sweep, followed by a lower time frame sweep within that zone, followed by a true change in character, this is the ideal setup. Hopefully that's clear. If you guys have any questions or examples in the next week or two, or stuff that's in your journal, man, I'm happy to go over them and go over why they make sense, why they don't from my perspective. What I say and what what I do and what you will end up doing in your trading career are not necessarily going to align. There's going to be things that you're going to be able to take that I would not take because they don't fit my criteria either. So a lot of people see this as no problem to take it. Personally, you know, with something like this, if this can't go, but this does, that tells me that, well, you know, this is a little bit dicey. Now, I wouldn't put a limit necessarily in here, but if I saw a 5-second chalk, given that this was like a 1 minute POI, I'd be fine with taking this now to the upside. Hopefully that makes sense. Cool. Let's we'll just jump out here. 15 minute. You know, ultimately this is like a big trade. I ended up getting in a lot higher once we actually broke this high, given the fact that we had all of the liquidity built. But I'll just play this through. Obviously, you can see how it works. Pretty simple. We have equal highs here. We had equal highs here. Equal highs across here. The only place that I was expecting to see a slowdown was right around here, because this isn't actually an equal high, and this kind of purged liquidity, and we came up to mitigate it, followed by a break of structure. So I was like, you know what, this is a reasonable area to at least look to kind of take some profits up. And you can see that we tap in, and I think we just blow right through this fucking thing. But anyways, anytime there's a pullback, something like this, this is where things kind of get complicated, because we have so much liquidity to the left hand side. Obviously, like, we're expecting this to kind of push through, so you're not going to be taking these legs like this. What you're going to have to do is go down to like a 5-minute chart and say, okay, well, ultimately, the lowest point before we broke structure over to this side right here. So this broke structure from down here, and then we broke structure here. So ultimately, from here to here would be kind of your area of whether or not you can get in. Let's just go like this, and that is in the discount. And then same thing with this, right? Like, once we break structure through here, ultimately, once we start pulling back, we have to start considering where we can get in from that level. So hopefully that makes some sense. I just want to go over one more piece very quickly from today. I think it was. Yes. Okay, so this right here. So we don't, okay, I say we don't trade news. We don't trade right before news. After news, it's no problem. Especially if you're a seconds trader, you can get the nice low stop losses. So I want to just show you how this would have been available to trade right here. Ultimately, we had the higher time frame, mitigation. We had the imbalance. We took out the high. We basically took out equal lows, came down, had our chalk. Because of the equal lows that built here, I wouldn't have necessarily got into longs. I would have been a little bit worried about coming back down to this extreme at this point and just inducing all of this. But ultimately, there was a nice little trade right in here. So let's go like this. 15-second. Okay, so same thing. Once we cleared all the liquidity over to the left-hand side, right when we kind of broke, you can see we barely broke this wick right here. Let's see if it's a little bit more clear on the 5-second. Okay, so first real entry with the 5-second would have been, okay, demand sitting here. Once we break through this demand, here's supply, here's your flip zone. Take this kind of down like this. Now, if this low would have taken this high like this, and then we would have taken this low, then we could have looked at the extreme to kind of take this. But really, the criteria didn't quite deliver. And the reason I can say that is because if you look, we've just created equal lows here, which is essentially saying that this high could, in theory, be weak because we've not been able to breach the low. So once we've taken out this low, then you could have just taken a mitigation process through here as well. But that also leaves you exposed to potential demand. So ideally, what you would want to see is this right before the move that kind of puts us up into here. You can see once we've broken through like this, then we can follow this mitigation process. And the reason we can do that and not really worry about these demand levels down here is because of the amount of liquidity that we took on the buy side. Once we take buy side liquidity with any kind of force with news, usually the only thing that's left is going to be coming back down to mitigate, right? So something like this, you would basically target, obviously your low point down in here. You could target below these equal lows as well, which is kind of what I thought was going to happen, to be honest with you. I was expecting to see something very similar to what we just went over, was kind of see something like this, and we would crash underneath the equal lows and then do the same thing, where then we come up and then take out the equal highs that we've just generated, right? But didn't end up working out that way. But ultimately, once you start to see a change of character at these lows down here, guess what? Now you can look to hedge this position going up, and then just move over to break even with this, move over to break even with this, and then just walk away and see which one ends up holding. I didn't talk a whole lot about hedging throughout the last 6 weeks because it's not really my style, because usually we don't really get the opportunity to really play extremities during sessions. But when there's high impact news like this, usually there's extremities that will show character shifts on both sides. And when that happens, you can hedge your position if it happens during your session. So at least that way, if we end up going higher or lower, you're prepped for both of them, and then just have hard take profits underneath the lows and above the highs. And that's it. Any okay, not any questions. Was this relatively clear on kind of how I use the second chart? We're going to get into it in more detail in the new year. That's probably going to be the primary focus for January. The first 2 weeks is going over seconds entries, and you'll be able to pair it with how I use it during the live trading sessions. Is this relatively clear for the first time we've really talked about the higher time frame sweeps? And if it's not, don't be shy, just say no so that I can at least address it. Okay, cool. I know what I'm doing in my head. Yeah, 2 seconds, Hugo. It's very challenging to set out clear-cut rules to articulate to somebody else, and that's what I'm working on doing over the course of the holidays, is just making things simpler than what they already are. I feel like they're relatively simple with that new revised trading plan, but I just want to make it tighter, more checklist kind of style. If this, and this happens, this is our entry model. If this, and this happens, this is our entry model. So over the course of the holidays, I'm going to be picking away at this. I don't know exactly when it's going to be ready, but you guys will definitely be the first contenders, as well as the September masterclass where I do the refinements. But I would urge you guys to obviously, put something in your own writing, make it make sense for yourself. Go ahead, Hugo.
Hey, can you zoom into the seconds up here where you just were?
Yeah.
Like the 5 seconds. Yeah, the 5 seconds. Yeah. I wanted to ask you, because I know it's easier when you have a clear 5-second chalk. But let's say like you had everything you're looking for, like a higher time frame sweep. Let's say maybe even like there was a candle like that and you had this liquidity.
Then I'd wait for that.
Yeah, so let's say like it was kind of an extended push up, and the 5-second instead started doing this. Like, are you comfortable kind of getting on a mitigation, or
no?
Not?
Probably not. I would probably, if we start to see something like that, where we go like this and then start moving up like this and then doing the same thing, chances are we're just building this kind of structure, right? This will get ran eventually, but the thing is we need to see a character shift before being able to grab something like this, right?
Yeah.
Otherwise, it's dicey, bro. The only reason we were able to do it in here and grab a mitigation is because of how much liquidity that we've cleared on the higher time frame, and we've come up to mitigate a POI. So because there's nothing left up here, because we've already taken it with news, this is why I'm comfortable taking stuff like this. But if this would have built like this into like this demand zone, I would have had to wait for this to kind of flip over and then do something like that, right? Or sweep and then give something like this.
Yeah. Did you see criteria on the retest of the news candle today? I think this is something that Mercedes
here,
said.
right?
No, the retest for the buy, like the demand zone, when it came back on the second.
Here, let me get us down. Yeah, let me get us down in there.
Yeah, on the 5-second. I don't think there was criteria, but I wanted to see if you thought there was.
Okay, give me a second. Let me
other than the risk entry, but
let me just go like this. It came all the way down, eh?
It did, yeah. Yeah.
So let's just go like
I think it reached like a 3-pip risk entry, but I didn't see anything on the seconds.
Okay, so
maybe you did.
Well, I haven't been trading, right? I'm done trading until next year.
Yeah.
Let's have a look at. Okay. Okay, this is one of these instances where it's kind of like, yeah, take the risk or lose the chance a little bit, but
right.
I don't know that I'd be able to take this. And let me show you what I would see here is, if there was criteria, which I mean, I'm sure to somebody within somebody's trading plan, they're going to say yes. For me, it's not necessary. And this is kind of like leading into exactly what we just talked about. This is the high that puts in the low, right? So ultimately, we needed this to break to be able to take something more in this extreme, and that didn't happen. So ideally, what I would like to see here would be this, and then kind of come down into here, and I would have been fine. I guess if you really want to pick out details here, and again, take this with a grain of salt, not telling you to do this, to a certain degree, there's a level of supply sitting right here that essentially took out this little level right here with this candle. Let me just put that.
Yeah.
So like, again, is this a textbook setup for me? No, by no means. I feel like there's not enough reason for price to want to travel in this direction, given the fact that we have all this imbalance sitting like this. You know what I mean? Like if this was all mitigated like this coming down into here and I saw this little shift, that would be a little bit of a different story. But because we have all of this, there's not a whole lot of reason for price to want to navigate, especially with the equal lows over on the left. I would be worried about this crashing down through here.
Yeah.
You know what I mean?
Can you
So-
play it forward a little bit to see if it does come back to where you marked up, or no? Or does it just, no, it didn't, right? Yeah, because your ideal setup was at least for it to sweep this one more time and then, right?
Yeah, so
Get it, Doc?
so look at this is actually not a bad setup. Once we change character here, basically somewhere within this region, provided that you kept your stop loss underneath here. I don't know what this delivers. It's a news day, so probably not a whole lot. Oh, that's not bad. Okay, so let's say we cover this low. So let's give it like an extra 0.4 of a pip, something like this. And then ultimately, when it comes back into sort of like that, 2 pip, whatever it is, this is a valid entry, actually. This isn't a bad entry at all, because we've already come down to mitigate this. We're going to come into this little range right here, sitting like this. You could take the equilibrium, but ultimately you'd be taking a market order based on the fact that we've changed character like this. Now, we could very, very well come like this, produce a reaction. I'd be moving over to break even. As soon as this candle would have printed, I would have moved to break even, because if we would have went like this and then swept this entire thing again, then I could look for criteria down in here, right?
Okay, yeah, because in my head when I was looking at it, I thought that this was sweeping this to come back and sweep this now.
Gotcha. Well, here's the bottom line, right? When we start moving impulsively, once we break structure, you'll notice that this creates this. We fail to break it, right? Come down, and then it's process of mitigation. So if we break this from a demand level, chances are we're going to change character, right?
Yeah, that's true.
So,
okay,
but it's piecing together a narrative, and the only reason I'm like a little bit iffy about this entire setup was given the fact that we don't have any mitigations coming into this area, which doesn't really give a whole lot of fuel in terms of that built up liquidity. But the other detail that needed to be kind of noticed here is that obviously we've like swept this low pretty aggressively down into here into the more extreme, but because of the equal lows resting like this, this is just it's not ideal, man. Like that's all.
Yeah, no, that I was thinking the same thing. There's too many mitigated lows to the left and all that. But
and you know what, man? Pick your criteria. How I get into trades, how Mercedes gets into trades, how Sketchy, how Albie, Tricky, all of these guys, everybody does things a little bit differently. This might fit their trading plan. I would be a little reluctant to jump into something like this based on all the equal lows to the left. And usually what ends up happening on news days, which I'm sure most people can kind of resonate with, is if we go one direction with news and we take out all this liquidity, what's the likely thing to happen next?
Yeah, exactly.
You know what I mean? So
yeah,
that was kind of my narrative, is like I was watching this with oh my god, somebody else this morning, one of the masterclass guys. Wow, I'm just drawing a blank. But anyways, long story short, I saw equal highs resting here, unmitigated PY up here. We came up, we changed character on the 15-second. It was Derek, Jesus Murphy, thank you. So many names, man. I've had so many meetings the last couple of days. But yeah, ideally, what I would have seen is, or like to see, was this logo, and there's actually a higher time frame demand down in here, and that's where I would have looked for something.
Yeah. Okay. Thanks. I appreciate it.
Okay, bro.
So Tyson, sorry, just to summarize then. So in terms of that setup there, if had we seen the sweep, well, we didn't see the sweep, but had we seen a sweep chock in the other direction, you'd be kind of interested in taking the retest of market. Is that is that what the problem was? Yeah.
Sure.
So it was the lack of sweep of the sweep into the POI that's kind of put you off there.
Yeah, exactly. I mean, you know me, I think you know me now after 6 weeks. Like, man, if it doesn't sweep, I'm not really interested.
Right. No, that's brilliant. Then that's just kind of
sometimes it sometimes it doesn't show it, and it ends up running 40R. and that's okay.
Yeah,
If it doesn't meet your
that
criteria,
happens.
big fucking deal.
Cool. Right. Brilliant. Thank you.
Yeah, no problem. Is there a sweep on the M1? This is the M1 here. Well, this is a break, right? Like, look at, good question. Let me go like this. So we have these lows like this, right? This gets taken right here. We don't break structure here, so this is not a change of character. These equal, this is not a sweep. This is a break of structure up until this technically breaks on the 1 minute, right? For us to then take something like this. But when we get into 1 minute POIs, right, at the more extreme areas, ultimately we're looking for that 5-second flip. Hopefully that's not too controversial. Does that make sense, Joe? Hopefully that's okay. Cassia, did you still have a question?
Yeah, I have, but I need to show you on the chart. Like,
Sure.
can you go to, I don't know if I can find it. I just want to ask if I understand this sweep and chalk.
Okay. Okay, give me a second. Let me go out
15
to,
minutes.
yeah.
And
Over here.
can we zoom out? Because I need to find this. Jesus. Oh my God. I cannot find it. Where was it? Oh my God. It's from yesterday. Yeah, it's Kasia, by the way.
Gosh, oh my God, I'm so sorry. Why
That's
didn't you correct me
okay.
earlier?
Yeah, I didn't have a chance to talk to you like that.
Okay,
but,
okay, Kasia. My bad.
yeah.
I like that a lot better. That's got a nice ring. That's funny. So,
Yesterday, I want to ask this yesterday. Can we maybe zoom in now?
where do you want to go? Yesterday?
Yeah, yesterday, but I've got on London time. You've got this because you've got
In here
different
somewhere?
time. Oh my God, where's? No, the one that we. Oh, yeah. Can we go right a bit more? Oh yeah. Oh here. And can I? Because I was thinking, I just wanna make sure that this is. Can you see my arrow? No, you cannot see.
No.
This one. Can you see now? No.
Nope.
And can we go to okay.
You want to share your screen? Is that okay?
Wait, I know where I wait, this here. I think it's somewhere here. It's here somewhere. Yeah, it's here. Maybe it's not the best example, but can we go here like to 1 minute?
Okay. Okay, 1 second. Here. So let me just go like this, and I'm going to put the replay, yes, and I'm going to go like this, replay, and let's go like this somewhere and go down to the 1 minute and look at all this price action. Okay, so you're in London, right? London time is what you're asking?
No, it was just the Asian. It was spread hours. I just had a look. I just want to understand if I just want to know if I understand this chalk and sweep.
Okay.
But it just, oh my God, I cannot find it now.
If you want, what you can do too is when you find the screenshot, send it to the group and just at Fractal Markets, and then I'll address it a little bit later on today. Or what I can do is tomorrow. Are you going to be in the class?
Yeah, of course.
Well, then why don't you find it for us and send a screenshot, and then we can address it tomorrow. Is that cool?
Yeah. It's okay.
Just then it's a little bit more organized for everybody too. And also, guys, anybody who's in this session right now, this weekend, like I said, should be about addressing questions you have about specifics on charts. There's not a whole lot of content for me to go over in week 6. It's more so trying to make sure that any kind of outstanding questions are being answered. I'm going to put a note in the Telegram group as well. Bombard me. Any questions you have, if you have markups, have them saved. I can get you guys to share screens. This is you know, I mean, obviously you got a couple more in the new year. You guys are lucky. But this is the last one before the holidays, right? So let's get some questions answered over the course of the holidays so that you can start to develop your trading plan and your edge, right? Kasha, I can't believe I've been saying that Cassia this whole time. That's so funny.
I got a question also with the Notions. If I want to, I've got all my trades in Notions. Can
Yeah.
you see can you have access how to, like, if for example I start making my trading plan in Notions, can you have access? Can you see if it's okay, or like how?
Yes.
Like how do I do it through Notions? Because I don't know, it's maybe I don't know.
Well, so you want me to be able to have access to look at it?
Yeah.
Yeah.
I
So Zen uses it all the time. And whenever
okay.
we have calls like once a week at least, Zen, and he's always sharing screen, showing me in Notion as well. It's really easy. So I can show you how to do it.
Yeah. But for example, but if I have a trading plan, do you have it in Word or do you got in because I think Notions is better, works for me.
Okay,
like
because you can put it like a checklist probably, right?
Yeah. Yeah. So can I send you that like as a document, or like, I don't know.
Well, what you can do is you can actually grant me access, I believe, to view it in Notion, and I think I can look it
Okay.
up.
All right.
I believe.
Okay.
And the other thing you can do is you can save it as a screenshot, and I think you can transfer it to a PDF, which is pretty easy to do if you have a MacBook.
Okay.
And then
Alright,
you can just
yeah.
email it over to me, and then I can do markups on and then send it back. You know what I mean? So that we both have
Okay.
authorization.
Okay. All right. Yeah.
Yeah,
I
share
do
button
this
on the
way.
top. There you go, Zen. You're gonna have to help her, man. Because
Tarek is helping me.
you know what?
Thank you.
I never really used Notion. I was always on Evernote. I don't know if anybody uses Evernote as well.
I used to use it,
Yeah.
but it's need to Notions.
Yeah, Notion's beautiful. One of the guys that's in our master class, I don't want to name drop, but anyways, he's got a really good template for Notion, and in the process of hopefully developing it over the next few weeks over the holidays with him, and having it accessible to anybody who's taken a master class. It's going to log your trades, the amount of R that you take per week, your average amount of trades. It's going to have all kinds of different calculators in it. It's also going to give you notifications for different news events. It's a pretty crazy build out. So hopefully in the new year, and again, it's still pending, and it's not me building it. So as long as we come to some sort of an agreement, I'm looking to get that terminal out or that dashboard out to anybody who's taken a masterclass. So yeah, other little things that are supposed to come hopefully early in the new year, but I'll keep you guys posted. But yeah, anybody who wants to build out their trading plan and looking for a little bit of advice with it, just remember, like, over the course of the holidays, I'm going to have my laptop, I'll have my iPad. I'm not going to be as active, of course. I'm going to visit family, but if you have questions, I'm pretty good to get back within the same day. Yeah, you use the resources. Like, I'm here with you guys for the next 4 weeks. Now's the time to do it, because after the sessions are done in mid-January, it's not that I won't help you. It's that I'm also going to have another 40 students that are learning the same thing that you just did for the last 6 to 8 weeks. So I'm going to have to be catering to them. So any questions should be getting written down and addressed over the next few days and into the next few weeks. And if anybody needs help building a trading plan, I'm happy to kind of give a template or whatever, or give some feedback. Okay, guys. So I'll catch you. I'll catch you guys tomorrow. Like I said, just be sure to get some questions together for tomorrow, whether it be specifics on charts, whether it be terminology, whatever it might be. And maybe what we'll do tomorrow, if there's not a whole lot of questions and stuff like that, is maybe we'll go over how to build a trading plan. Would that be of interest to anybody? Like, how to build one out properly? Okay, cool. Cool. Yeah. Okay. I think that's what we'll start talking about it tomorrow, and then Sunday is when we'll actually maybe do it all together, and we'll build out basically how to kind of organize it in a way that's easy to follow, and then how to make kind of like a one pager that you can keep beside your desk, your criteria and stuff like that. So I think that's what we'll do, is we'll start doing that together this weekend. and it's going to take some time. I mean, it's probably going to take you know, a little while to really make it make sense. But even going into the new year, you know, we'll at least get an idea down on paper, and then you guys can start building it out for yourselves as well. Cool. So anybody who doesn't have a Notion account should get one. I will post, I guess, just a link, and I'll tag it in the Telegram right now. Notion is it SO or IO or whatever it is. So do that, and then I will. I'll send out my template that I do have right now, and then we'll start building some stuff out this weekend. So listen, guys, have a good rest of your Friday evening, morning, wherever you are in the world, and I will. I'll catch you guys a little bit later tomorrow. Bye-bye.